Unit 4, Performance Management. And with me in the room is Ms. Venter, if she would like to say hi. Thanks.
Good morning, everyone. I'm glad you're here, and I hope you have your coffee ready for an exciting session. Thanks.
Thank you so much for joining us, students, and also Ms. Venter. Ms. Venter will also be assisting on the chat. If there's anything that you would like to ask, please feel free to do so. After each question, there will also be time for questions. Okay. Show me some thumbs up. Is everyone okay? Is everyone happy? Excited to be here? Fantastic, fantastic. It's nice to see you. It's nice to have you this committed this early on a Saturday morning. It's nice to be here. All right. Like we've said before, this is our contact information. Remember, if you've got a technical question, you're struggling to calculate something, then you can just ask us via this email. You can book a consult. If you don't have success with booking a consult, then please do send us a mail and we'll try to assist you in that way. Remember, again, this is just a reminder that the exams that you will be doing are on the My Exam site and not on My UNISA. So remember that. And then this is just where we are. This is, we are now finished with the first study week. And we've got the upcoming test dates. And then just always remember that your announcements are important because anything that we do want to communicate with you, we will post it there. Okay. In terms of the lectures, you've had the welcome and introduction, you've had the test 1 preparation lecture, and this is now today the second lecture for preparing for test 1 that has to do with learning unit 4. So if you've missed these lectures, do go and get the link and watch the recording. The slides are also available under additional resources. Okay. I have a bit of a cold, so just excuse me here and there. Okay. So the topics that we have covered, we've done learning unit 1, 2, and 3. And if you go to My UNISA, we are now at learning unit 4, performance management. Okay. This is just to show you that there's great integration within the management accounting topics. So strategy is what we've done before, but you'll see that strategy forms part of risk management that you're going to do later in the year. And it also forms part of performance management. And then working capital is also an important part of performance management. Okay. So in terms of performance management, remember that we do want to know, for example, our strategy. When we're setting up our strategy, we already set up the KPIs to make sure that at the end of the day, we're going to achieve our strategy. So this performance management is then measuring if we did manage to achieve the objectives in terms of the strategy that we set. And this is also, remember, the strategy is something that keeps on changing. So, for example, as I see something from the external environment, I will update my strategy and make sure that I keep up to date with the market and trends and the industry. And this will also help me. My performance management is a tool that will help me to see, am I achieving my strategy? Will I be able to, create sustainable wealth in the long term for all my shareholders? So that's very important there. Then it's just, what are we doing here today? So we're just going to have a very quick look at, I've downloaded the latest Nedbank integrated report, or I've included a couple in my slides, just to show you that what we are doing in terms of performance management and integrated reporting, you can really see it's very important in the industry, and people are actually reporting on it. So you're welcome to go to the link afterwards and see how does strategy and performance management in the real life look in an integrated report. So I've taken the Nedbank integrated report because they perform well in terms of that Ernst & Young rating in terms of the quality of integrated reports. So it's a very nice integrated report to have a look at. Example 1, example 2, example 3, we've got, this is all on performance management, C2C, build, and CWT. That is what we'll be looking at this morning. Okay. So an integrated report, before we have a look at just the brief overview of Nedbank, you'll see that, yes, they always want to look at the strategy and objective, because at the end of the day, they want to make sure that they achieve their goals and vision and mission, and that you'll see that they create sustainable wealth, yes or no, or did it erode? Okay. They're also going to report on the 6 capitals. And then all the while, remember that our statements are there to address the needs of all the key stakeholders. So the 6 capitals is financial, manufactured, intellectual, human, social and relationship, and natural capital. And our key stakeholders are typically our employees, our customers, our shareholders or investors, regulators, society, and financiers. So remember, when we do the strategy, even at that stage, we're going to set up the key performance indicators, because at that stage that we set up the strategy, we want to make sure that we can achieve our objectives. And we do that by setting ourselves these KPIs. Then this is the chat or the learning unit 4. What are we doing? We're evaluating the performance. And the times are gone when people only, or stakeholders are only interested in the financial and operational performance. It remains very important, but emphasis is growing on the non-financial performance as well. We're also going to be looking at reward structures. That is your bonus. Okay. So, for example, a manager, are you looking at the manager or employee's bonus, or are you looking at the performance of the entity or a division? So remember, if you do look at something like performance, you want to make sure that it is controllable, that it is within the control of this person that has to do the task. Are they able to control the outcome? Do they have input into the outcome? Otherwise, you're measuring them with something that is outside of their control. And it also has to be reasonable, because someone would only, work towards a goal that they know they can reasonably achieve. Okay. Then this is just the example that I've been telling you about, where we're looking at the integrated reporting of Nedbank. But please, if you have a minute, go and have a look at this or any good integrated report and see how they do, incorporate the strategy, and they incorporate the 6 capitals, and they incorporate even the key stakeholders. So here they're showing you, this is the picture that they are using for the 6 capitals. So if it's financial, this is how they do it: manufactured, natural, social and relationship, human, and intellectual. And then they also tell you basically the ESG, and then that they've got other guiding principles that they consider. And it's good to see that companies are not just focused on financials anymore. They want to make sure that, they comply, and that they also then meet the needs of all the key stakeholders. So this is what I wanted to show you here. Is they even tell you these are the symbols they use for the employees. So they want to make sure that, as they are reporting on their performance, how does it impact each of these stakeholders. How does it impact employees, clients, shareholders, society, and regulators? So I'll show you on the next slide how they do present it. So you'll see at the bottom there's a plus, when they've created value, or value eroded. Okay, so for example, a hybrid work practice, they've kept it the same, so it's just stayed the same, so the value's been preserved, but you can see that it links to the employees. Okay, so this is the key stakeholders that they have linked it to, is the employees. Okay. Then if I look at social and relationship capital, you'll see, for example, they tell you here again, first-time job opportunities, and who does it affect? It affects the employees, and it created value for them as well. So this is how they then, show with the blink of an eye, they can show you that they've created value and for who they've created value, and in terms of what capital that is. I think this will just help you to see some context behind the theory that you have been studying. And this, for example, they've showed that values eroded because there's been customer complaints, and here you can also see that the clients have been impacted as a key stakeholder. Okay. This is just another example where, for example, if you look at natural capital, they've said that there's been more fossil fuel usage, and then that has a negative impact on society and their clients in terms of the key stakeholders. Are there any questions at this stage? All right. Okay, let's then go on to the next question. Okay, so what we've said before when we were doing the strategy, I do see there is a question. Please go ahead. Hand raised. All right, I think it's perhaps a mistake. Okay, so the next question that we're going to look at is C2C. Okay, this is the question C2C, and we'll be looking at part B. In the previous class, I said it's a good idea to have a look at the required, because it's very important that you read the required and that you make sure that you answer what is being asked, because it doesn't help that you answer something and it is not, what has been required. So in this question at part B, we'll get to the scenario so that when I read my scenario, I already know what to look out for, and I can make the appropriate notes as I go along. So it says I'm going to assist Balesa in setting up ratio analysis. So the first thing that I'm going to do, I'm going to calculate for 3 years, okay? And then they tell me what part of the question I need to go to do that. So I don't have to read the entire question, because remember, this is a very big, it was a psycho question, so it's a long question. So they want to guide you and tell you, this is what I want you to calculate, and I want you to go and look in section 2. They also tell you to use year-end balances in your ratio calculations, and then also the rounding. So the year-end balances, it makes it easier for them then to mark it, and also for you to do the calculations. Then you don't have to go and calculate averages. So, and if the information is lacking, or the competitors or industry are using year-end balances, that is also what you'll be using. Okay. And then the second part of the question will be discussing the outcome of your calculation. So my suggestion is that as you calculate, that you also think what would be the reason. So, and many of the reasons you will then find within the scenario of the question. All right, so this is then part B. Okay. So C2C is a bus company. and they've been having financial difficulties. This is just the background of the question. I just want to tell you about, what C2C basically does. All right, so C2C, they are a passenger bus company, but they've been having financial difficulties. Now, this happened during COVID-19. So what I always tell students is, yes, COVID is over. So we won't have a COVID-related question at this stage, but there is always something happening in the economy, or in the scenario that will have an impact on your question. So just look out for what is in your question that you need to then consider. All right. So this question, we're saying they are having financial difficulties. There's lots of competitors entering the market. And then they're having difficulties in terms of keeping afloat, and they've got problems with declining revenue, volatile profit margins, and a large debt burden, which is of concern to them. Okay, so now they're telling you they have plans to improve this, and this is the plans that they are thinking about, or that they want to implement. Okay. So in 2021, they've discussed these matters. So they want to restructure. So all the non-profitable buses, they are going to close them down. Okay. Retrenchments, where necessary on the closed routes, they're going to retrench the staff. And then they want to obtain 14 million funding to help them with their liquidity issue and to invest in new buses. Okay. And this will help them get a competitive edge. But as we said, they're having liquidity problems. Okay. So number one was the restructuring, where we said, they've got these buses that they are that they are closing down because not all provinces have profitable bus routes. And then they're also telling us here that these buses will be rerouted to new routes that are more profitable. And then they also tell us one of these buses will be sold, but there's also going to be a new agreement with his father-in-law with regards to this. So this just raises make sure that that there's no ethical concern here if you're being asked about ethics as well. All right. And then retrenchments, they're saying that the staff were not happy, so they went to the CCMA because they were receiving 20% lower than industry. The union was able to negotiate with them, and the strike was ended, and they returned to work. All right. Then another ethical issue, the chief operating officer of the union's daughter was offered a bursary in the UK, and they're giving her this bursary to thank her. Okay, so this is just also an ethical question. So I just always make an exclamation mark where I see someone doing something potentially dodgy. Even if it's not dodgy, maybe that is something, if there is an ethics question, that you can then discuss. Okay. Funding. Remember we said they wanted 40 million capital, but the problem is that the bank that they're at, Innovation Bank, has said they are not willing to give them more money. They used to have a loan covenant of 1.4. They've already increased it to 1.6, but they say they should rather go and get equity to fund them. And this will also then improve their debt to equity ratio. All right, and then one of the ways they thought about raising equity would be through a rights issue. then this is the part that we are really interested in. That they're saying these are the ratios that they want us to calculate. And I believe these will give us a good indication of the quantitative level of success achieved of these strategies and interventions to date. So these are the ratios. That this is quite a nice question because they tell you what they want you to calculate, and these are not difficult ratios to calculate. So what you need to know then from, in terms of the calculations, you need to know the formulas. I suggest you go to your managerial finance textbook and you revise that precious royalty question and make sure that you know how to do, these kinds of calculations. But these are some of the more easy ones, and I'm sure that you can get a couple of marks here. So let me just run through what it is they want. They want the net profit, they want the interest cover, the asset turnover, the asset to equity, and the debt to equity ratio. So you see one of them requires you to have the EBIT. So we have to just go and calculate the EBIT here. In this question, they calculated the EBIT by saying, this is the profit before tax, because remember, EBIT is earnings before interest and tax. So we don't start with the total profit because then we have to add the tax back. So it's easier just to start with the profit before tax. And then they added back the interest. I would have also counted back the other income. But in this question, SAICA didn't do it, but they would have had the alternative where the other income would have been added back in the opposite direction. So I think maybe just remember that EBITDA normally excludes non-operating income like other income because it doesn't form part of the operations. So I think this is something that is often, taken out, but in this question, I think there were two alternatives, so they didn't do it here. But you can please, and if you do make, say why you excluded other income, and then there could even be a mark in it for you. Okay. So again, just where are we in terms of what are we trying to calculate? We are calculating financial and operational performance measures, and there were no non-financial measures included. Okay. So you'll see here, we've got these are all the figures that we need from the scenario. So to get the net profit, we take the net profit and we divide it by the revenue. That gives me my net profit margin. The interest cover, I take the EBIT that I've calculated and I divided it with the finance cost. Then the asset turnover is the revenue that we've got over the assets that we've got. Okay. Then the equity, the asset to equity, we take the assets, we divide it by the equity, and then the debt to equity, we take the debt divided by the equity. So this is the simple calculations, that you can do that will earn you then these calculation marks. But I think what is very important is the understanding of what does these figures then actually tell me. Okay. So one of the things that you'll notice here, okay, so it's for 3 years, because remember they told us to do it for 3 years. So we've got the 3 years. And you can see that in terms of net profit, if we look at the net profit, it has declined and then it has slightly increased but it has not, this was then before COVID, and this is then after COVID. So we are not at the same net profit margin that we were at before. Okay, so, and this had a lot to do with COVID. So your question would maybe have something that happened to this company or the industry, and that would be your reason that you can then motivate there. Then the interest cover, you'll see that it was very difficult for us to cover the interest, but we've also managed to improve our interest cover, in 2021. So it's not what it was before, but it's not where it's also not where we want it to be yet. Asset turnover, that has also followed a similar trend, where our assets in terms of turnover has not completely recovered. Asset to equity, you will see that this trend has been going downwards continually, and this is perhaps have to do with some of our buses being old. Okay. And then our total debt to equity, it has been improving because we have been having to stick to paying our debt, as our financier is not willing to allow us more debt. And they've got the contract in place for us to repay the debt as we need to do this. A lot of these calculations, it does give you some insight to discuss, by comparing it year on year with each other. But it's also important that maybe if the information was available, that you compare it to industry or to their competitors to see, are we in line with what our competitors have been doing? You can also see that, remember we said in the scenario that we've taken out some of the non-profitable bus routes. And I think this also contributed to us recovering a portion of that profit there. Like we said, COVID is also to blame for this year, and you'll look out for something in your question that is applicable to the current environment. All right. We've all discussed all of these points as we were going through the increases or decreases. But what I want you to take note of, so when you saying, for example, the net profit, please don't say the net profit margin went up. Use the words like improved or deteriorated. Because by saying something went up doesn't indicate that you understand the impact of that. Okay. So you could have, we want to see that, you understand that this increase is good or bad. And then we also want you to see in the information. So whatever ratio that you've calculated, you have to link it with some reason. Okay. So let's say if you're talking about the net profit, okay. So one of the issues for net profit was COVID-19. Definitely you would earn a mark for linking it up to COVID-19. One of the other things that you could maybe mention was that it improved because some of the bus routes were changed. You see, by linking it up to the scenario, that is a way that you can make sure that you're then earning a mark for that. So for discussing, we want you to say, okay, firstly, we want to see, do you understand that it's improved or it's weakened? and where in the information do you get an explanation for this increase or decrease or this worsening or improvement. Okay. What I want you to then see from this, for this type of question, you see there's a lot of available marks. In this case, there's 13 marks available, but you only needed to get 5 marks. So what's very important is that you don't overspend in terms of time. Okay. So I wouldn't say if it's 5 marks that you just write 5 sentences. You need to have more sentences there. So for example, I would say if it's 5 marks, I would have 7 sentences, for example. But when my time is up, you need to move on to the next question. Because you can't get 13 marks if there's only 5 maximum. So make sure that you don't overspend in terms of the time, because that's one of the very important exam techniques, is that you stay within the time limit. Right. Are there questions at this stage? I see some hands are up. I see the first student, Wengai. I don't know if it's a legacy hand. Wengai Katio. Apologies if I mispronounce your names. Please go ahead.
Yes, ma'am. Good morning to everyone. I want to ask you with regards to interest cover ratio, where you stated that you need to include the reason if you are to exclude the other income. What will be what is the recommendations to students with regards to that? Should we exclude and put the reason? Someone is.
Ms. Spencer, can you maybe see whose speaker is on? Ish. I found it. Okay. Please repeat again.
All right. I was asking with regards to interest cover ratio, where you have indicated that
yes,
students will actually be recommended to include a reason where they exclude the other income. But from the exam technique, what is recommended there to students?
So I would have said that my EBIT is, I would have written that it's, for example, profit before tax. Then I would have added and used the amount 6.5. Then I would have added back the finance cost or the interest, because it's before interest. So then I've got my before interest figure. And then I would also have added back other income, because other income doesn't come from my operating activities. So normally that would not form part of this calculation. So then I would put a reason for adding it back. So that is how I would have done it. But in this case, I think many students didn't do the other income counting it back, and therefore they allowed this alternative where it wasn't done like that. But it is other income is not part of your normal operations. It's not an operating activity. So it's something like an investment that you get money from your investments or something like that, and you don't use your operating activities for that. So that is then often kept separately and not part of this calculation. So I would have, line for line said this is the amount, and then in brackets I would have just said other income does not form part of the normal operating activities, and I would have had the amount there. Does that make sense?
100%. Thank you. I've got another question.
Yes.
It's in relation to We have mentioned that when you're doing these ratios analysis, if in the scenario they've actually indicated that the industry or the competitors are using the closing balances, you need to use the closing balances when you're calculating the ratios. When exactly would you be required to use the averages? Is the scenario going to indicate that we need to use the averages, or you can judge from how the scenario is given?
You'll see in most of the cases we do try to say use year-end balances. I think in practice they try to use averages. Because let's say it's an asset line that you're looking at, you would take the opening balance and the closing balance and you would divide it with 2, because you didn't buy all your assets, for example, at the beginning of the year, nor did all your assets depreciate only at the end of the year. So that's why they sometimes use the averages. But most of our questions we do try to tell you, or we don't give you enough information to do averages, then you do then the year-end figures. But if we do tell you that someone, let's say an industry is using averages, then you can go ahead and do the averages. But in most cases we do try, because it's a lot of it. It's quite an additional calculation if you have to go and calculate averages for everything. And that's often not the purpose of the question, is to test if you can calculate averages. But in practice, that is something that they often do.
Oh, okay. Thank you. So if the question is silent, we can be safe to use the year-end closing balance.
I would make like I said before, I would make an assumption right there, assumed year-end balances.
Okay. I'm answered. Thank you. Then the last one is with regards to what is the exam technique answering when it comes to these ratios in terms of writing down the formula. Is it the formula, or yeah, for a ratio, or rather you can just punch in the figures as they are given?
You don't have. I like to write down the formula because it gives me. Let me show you. Like this. You see these blocks. I would use this formula just for these blocks where, the formulas are. They don't earn you any marks, but they do help you to make sure that you're on the right track and you don't get confused. So I would do these for my own purposes. And then you will have to show the calculations. You need to show that this is the asset amount that you've used, and then you've divided it with the equity. You need to show the figures, because if it's a complex calculation and there are part marks, let's say there's half mark for having the right asset and there's half mark for having the right equity, you want to earn those marks, but you can't earn those marks if you only give us the final percentage, unless that final percentage is correct. So it's better to show the figures that you've used, because if you then if there are part marks, then you can earn them. Otherwise, you will forfeit all the marks if you just give us the final, unless your final amount is correct.
Okay, I'm answered. Thank you. So on that one, when I'm writing the formula like the NPV over revenue, I can just use any shorthand that I'm comfortable with, right? Since it's a calculation, there's no need for me like to be perfect to write in full when I'm writing these formulas.
No, the formula itself doesn't earn you mark, but the application thereof does. So yes, you are correct.
All right. Thank you, ma'am.
Pleasure. Then student, let me just see. Mpumelelo.
Morning, ma'am.
Good morning.
I've just got a question just regarding the structuring of the answers, especially the discussion part. I think the calculation seems straightforward, but the substantiation, I'm just trying to figure out what constitutes 1 mark. So, for example, I see that you've discussed whether the ratio has improved or deteriorated, and then linked it to the scenario. Is that the mark? So, what's happening in the ratio, and the link to the scenario. I'm asking because, for example, that second point. Where's the second point there? Yeah, the net profit or loss margin improved from financial year 2021, blah, 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 because of lockdown. It's quite a few sentences, but only attracts 1 mark. So I'm just trying to settle it in my mind that obviously it's not just 1 sentence, 1 mark, but it's impact and link to the scenario. Is that 1 mark?
Yes, I think sometimes it takes more than 1 sentence to get your point across.
Sure.
So that's why I would also not say, if it's 5 marks, just write 5 sentences, because a lot of the time it takes me more than 1 mark to get what I wanted to say across. Or more than 1 sentence to get what you wanted to say, to get the idea across. So you'll see there's many marks available. So let's say you wouldn't have gotten that mark or 1 mark, but you'll see this one has 2 marks here. So, but that's again, I would say the mark is for having a link between the percentage, that you could see it is an improvement or a deterioration or a weakening. And how is it linked then to the scenario or to the industry? In most cases, I would say, so you've got, I'm going to just draw this picture again. So you've got your scenario where you've got most of the marks is coming from your scenario. Okay. So you will link most of the discussion points to things that you could find in your scenario. Only thereafter, once you've exhausted those or noticed something like inflation. Inflation is quite important when you're doing ratios. So then you'll start looking outside, like at inflation, and you'll look at industry, what happened in the industry and what did my competitors do and things like that. So most of the information would be coming from your scenario, but especially for this types of question, if you've got fluctuations, you need to consider something like inflation, something that happened in the economy, because that will also have, let's say, the rand US dollar rate in comparison to each other. So that's also something from the external environment that for ratios is very important to consider if you've got dealings with, for example, in dollar. If you don't, then it's irrelevant. Sure.
Thank you. And then the other question just regarding the calculation, yes. I would not have done a table at all. The format of the answer wouldn't attract or push away how the marks are given, right? If I just went ratio for ratio, formula, then calculate, Perfect. Formula, then calculate, formula, then calculate, that would be fine.
I would have done it the same way. So this is just, I think in terms of the marking that they've done, this was the easiest way for them to do it, but I would have done it the same way. I would have said net profit margin, named it number 1 to all my calculations. Okay. Then what I would even do is whilst I am doing the net profits on, let's say, page 1, on page 3, I would do the discussion already. Yes. As I'm seeing net profits, I will number it number 2 in discussion, and then I would start to say, what is the reasons for this? But then just remember that you still don't need to exceed your time.
I see. And then so you're sort of building your discussion as you're doing your calculations.
Yes, because as you do the calculations, it becomes evident what you need to discuss.
Okay, awesome. Okay, thank you so much. Perfect.
You're welcome. I see another student, Angeline. Please go ahead.
Yeah, the question is with regard to the 6 capitals. So I saw there by Nedbank, we do have manufacturing. I would immediately say that Nedbank is not a manufacturing company, so they won't have that manufacturing as one of the 6 capitals. So my question is it possible for one of the 6 capitals not to be applicable to a company, or all of them will be applicable?
You'll see in this case, when you look at what they are classifying as part of their manufactured capital, so they've linked it to the floor space that they have been occupying. So maybe it's they're not making something, but it's also still an asset for them is the offices that they've got. But
Okay,
if
but
they
would we say that all the capitals or all the 6 capitals will be applicable in each company?
I think in most cases it would. Maybe there would be some cases where you're a digital company that it maybe is different. But yeah, I'm not aware of such or I can't think of such an example at the moment. If you do find one, please do tell me or send me a mail and then we can discuss it.
Okay. Okay, now with regard to the ratios, I just want to know the format of the answer. What is the trigger for the format of the answer? I would first give you this example. Like interest cover ratio, we would say that we want to know how many times does the income before interest and tax cover their finance costs. Then I will know that the answer will be 8 times. But now, somewhere answers will be percentage, somewhere it will be a 1.6 is to 5 or 1.6 is to 0. So I want to know what is the trigger. Would you be able to advise on that one? Maybe if I forgot the definition of the ratio in an exam room.
Antoinette, you are muted.
Thank you. I think please go to the managerial finance textbook and have a look. There's only a couple of ratios that have times next to them or days next to them. That is more in terms of the working capital. And I think it's easier, and the rest are mostly percentages. So I think it's easiest to just know which ones are times, and then that is the easiest way to distinguish between them.
Okay, thank you.
Okay, pleasure. The next student, Ragodile.
Good morning, everyone. My question is, how do we know which ratios are applicable if the examiner is not nice enough to state which ratios to calculate?
I think then it's important that you think about who are you doing these ratios for. So let's say the question says that you are doing it for a financier. Then you would be thinking what ratios are important to them. Typically debt, equity, those types of ratios would be important to them. But then if you think about society, things that would be important to them would be something that has to do with, pollution, jobs created, things like that. Those would be more non-financial performance indicators. If you think about your shareholders or your investors, they'll be interested in the capital that they've invested. So it will be something like return on invested capitals. Your employees, for example, would be interested to know, for example, how many retrenchments there were, how much was the salary increase, is the company sustainable? Are they going to get money next year? Is their job secured? So I think the question will guide you in terms of for who are you doing these financials. And I think if you know for who you are doing the financials, then it makes it easier to know, which ones you need to do. But when you do go and have a look at your managerial finance textbook, let me see. I just want to show you something quickly. In chapter 8.
This is Kumran.
Just want to
If you
show
just, you found it, yeah. I would say if you go there to the index.
So what I want to show you
The-
here, you can say again what I just want to show. This is just an example. All right, this is what I wanted to show you. Okay. Okay, so have a look at this financial analysis outline. It will tell you that if they want to know about profitability, what it is that you need to, these are the typical ratios. If they want to look at capital structure and solvency, these are the typical ratios. Liquidity, return on invested capital, financial market, cash flow, and performance related. So have a look at this, and this has also got an explain or a table where it shows you the calculations that you need to perform and how they work. And it's also got an example on how to do it. So I suggest you come here and then also have a look at who these key stakeholders are. Okay.
Thank you.
Thank you.
And then my second question is, if it happened in Roman figure 1 that my answers are incorrect, so instead of like improvement, the ratio declined. So in Roman figure 2, when I like discuss, and then I say this ratio declined, but instead of like improvement, will they like feel like a mark with eranyana or nothing? It's
Okay,
like
so it will depend. Let me go there. When I take you. Okay, so let's look at revenue and let's look at, you see these two lines. For example, even if you messed up your calculations, you can still see that revenue has declined and then increased. Even if you messed up the profit line, you could see that the profit has decreased and has increased. So even if you messed up the net profit calculation, or you would still be able to get the marks if you were able to understand that something happened in 2020. What happened in 2020? It was likely due to COVID. And why did it improve in 2021? It was likely due to the fact that I've streamlined my bus routes, and maybe because I have less employees at the moment. So the principle that you will be discussing, even if you've got this incorrect, you've made an error here, but if you are still able to understand the debt to equity without, the impact of debt on equity and the ratio between the two, even if you've made an error in the calculation, but you understand the principle, you'll still be able to get those marks. But you will not get a mark for telling me that net profit improved in 2020. You understand? Because we can all see that net profit has declined. So if you've got the principle correct, even if you've made a calculation error, there are still discussion marks available that you will definitely be able to get.
Thank you.
Pleasure. All right, let's go to Part B. All right, Part B is a remuneration type of question. Okay. All right, so as we said before, let's go to the required first. Okay, so there's an incentive scheme. So there's two parts of this question. Read the required nicely so that you know what you need to do. It doesn't help you answer a question perfectly, but it's not what was required. Okay, so make sure you answer the required. So calculate the amounts due in cash at the end of each financial year, and then discuss the advantages and disadvantages of this incentive scheme. Okay, and then this is the bold question that we are looking at. And there's also a communication mark available there. You'll see this is just an extract of the question for 15 marks. Okay. So where are we in terms of our financial performance analysis? We are looking at financial performance, and we are looking at it from the perspective of a manager, and because we want to determine his bonus. Okay, so this scenario creates a picture of how his performance bonus is being, how they're going to calculate it. So every company will have their own way of calculating their bonus and doing their bonus scheme. So this will differ from question to question. Okay, so, and this was quite easy calculations. So let's just quickly go through what they say. So this is the scheme. So if you do this question, if it's a long question, come to part 4 where we are discussing the performance incentive scheme, right? What they want to achieve, they want to drive value creation for the shareholders, okay? And the plan that they've got, the scheme, is that at the end of each financial year, 2.5% of the, sorry, let me just erase that. (2.5% of the market capitalization will be paid to them, but it will vest 60% in the first year, 80% in the second year, 100% in the last year. So it's for 3 years. Okay. This is some of the information that they provided you with. So they give you the share price, the number of shares, and that gives you then the market capitalization. So again, first we're going to calculate and then discuss. So it was easy. This is the base year. So they're saying that we need to look at the increase from the base year. Okay, so all of these increases relate to the base year. So they're looking at what is the market capitalization in 2021, 22, 23, 24. And then you need to each time determine the increase from the base year. And then that is how you then get these amounts. And then 2.5% is how they calculated from there. 2.5% is the amount. And then 60% of that in the first year, 80% in the second year and 100% in the last year. Okay, so now we've seen, okay, in 2021, this is what he's going to get. 2022, sorry, this is what was left, and the last year, there we go. So you'll see that one of the advantages is that it's for 3 years. So we're going to make sure that this manager stays with the company for at least 3 years. Okay, so that is a good thing, because remember, we want consistency. We want him to work towards, you know, creating our shareholders' wealth, which was our goal that we set in the scenario. And because you'll see that this incentive scheme is based on market capitalization, the shareholders will be happy, because he will be working towards achieving this goal of theirs as well. So there's some goal congruencies that they're working towards the same goal. It's over 3 years, so not everything has to be paid immediately. So that is a good thing. Okay, but what is the disadvantages? Market capitalization is the share price times the number of shares. But it was not just Mr. Mukuru and him and himself, his achievement to get an increase in market capitalization. So it was a team effort. So it's not really fair to allocate all of this just to him. Okay. Then there can be some manipulation. So they can, Mr. Makuru, you know, can manipulate the market share by issuing more shares, increasing the number of shares. So there's a bit of a risk that, you know, there's going to be some manipulation because he wants to get this bonus. And it doesn't necessarily reflect, you know, good performance. It might just be an increase in the number of shares. This scheme is also not based on, you know, the balance scorecard. It doesn't consider long-term value creation like your EVA. It doesn't concern, you know, it's just one financial measure. So maybe it would have been more prudent to have several financial measures included in here. And then there's no non-financial measures included, like his leadership, you know, how he works with his staff. There needs to be some motivation for him to be a good leader. They cannot just be motivating him to increase the share price. Okay. Then there's also the risk that, you know, we are, let's say there's poor performance. Okay. Then are we still going, we don't take back the bonus we already gave him last year, or we don't cap it at 0. What is the, you know, the clawback for the company if he doesn't perform? Let's say in the last year, he's manipulated the financials in the first 2 years, gotten a great bonus, but in the last year, you know, he's no longer able to, for example, manipulate the statements, and then the money, there is no growth, he gets nothing. But the other 2 years, he's already got his money. So there's the risk, you know, that they paid him for something that in the long term, they didn't get the worth that they wanted to get. Okay. Are there questions at this stage? Okay. Let's do the next example. So this is a CWT example. I think some of you may have already seen this question. It's in your tutorial letter, and it's also got a strategy part. So let's just look at the financial performance and the non-financial performance. Part B of the question. Sorry, just a second. Okay, part B of the question. I remember one of the students asked this question before. So how do we know what they want? Okay, so we are telling you here that the ratios are required by the bank. So analyze and comment on the ratios as required by the bank. So even if they didn't tell us what ratios, we would typically think what type of ratios the bank would be interested in. We gave you these two because we wanted to guide you. But let's say there's 5 ratios that all have to do with what a bank or a financier would typically be interested in. This is now the capital gearing ratio, but it could be the debt to equity ratio. So those would also have to be marked correctly. Okay, so if it's an alternative, that will come to the same discussion point, because capital gearing ratio and debt to equity ratio will have the same discussion points. Okay. So if you've done other calculations that are also valid and it wasn't prescribed, we didn't tell you do these two. We just told you do what ZA or bank would be interested in. Then the memo would just have several additional alternatives that you could have done. Okay. So like I've said before, my exam technique would be, I've got these two ratios that I've got to calculate. I would then write them down, put the formula down. Like I've said before, these do not earn you any marks, but they do help you to stay on the right path and include and exclude the correct amounts. Okay, making it easier for you. And then you need to show us the amounts. That way we know, if you've made a mistake, that we can still give you part marks.
Antoinette, you're muted.
Apologies. Sorry, I try to mute when I cough and then I forget. Sorry. Thanks. Okay. So Mr. Barber contacted the private banker at ZAR Bank. Okay. And he wanted to know if they could raise more funds. Okay. And then the bank told them what they would be looking at. So they would like to see the capital gearing ratio and the interest ratio. Okay. For those 2 years. You'll even see if I go back, just want to go back to the required. You'll see it's very important here that it's 2 years. All right. This will also help me to discuss by comparing the 2 years with each other. This is the information that is given. So this is the statement of profit or loss. Sorry, this is the statement of financial position that you've got there. And then we're going to the notes quickly, but these are the equity, the liability, the long-term liability, short-term liability, including the bank overdraft, including the short-term portion of the long-term debt. And this is my 2025 year, and this is my 2024 year. I see there's a hand raised. I'm not sure if it's a legacy hand or a question. Student Angeline.
Okay, with regard to you see the finance cost there that were used to calculate the interest cover ratio. On the notes, note number 2, it says there includes all interest from. According to me, if in exam they say interest from, I would say I cannot calculate interest cover ratio because these are only interest from and not to. the company or to the bank. So I don't know if that matters, or as long as you need the interest, you don't have to care if it's an interest from or to.
I hear what you're saying. It is a bit ambiguous, but I think that if you do, okay, maybe when I get to that, then I will discuss that with you. Okay.
Okay.
So, all right. I understand what you're asking. Okay. Okay, let me do the what you're asking about number 2. Okay. So in terms of, let's go and look at interest-bearing debt, short-term and long-term, divided by shareholders' equity plus interest-bearing debt, which is again short-term and long-term, and that is my capital gearing ratio. So the first thing that we need to calculate is how much is my market capitalization. So they've given us a note here. So even though they tell us, this is the equity, this is the reserves, they're giving us the market value here. So it's 20 million shares, and this is the share price. So we know the market capitalization is 208. Okay, so what's also good to remember here is this 208, it already includes the retained earnings. So when you're doing the equity calculation, you don't have to then include the retained earnings again. You see, this 208 is the market value for the total equity, and it already incorporates this 35 and 20. So this is the market price. 208 then replaces the 55,260. Okay, so this is just the first note. So I'm going to just look at what it is, what was said in terms of the debt part, okay, because there's a short-term portion and a long-term portion. And then we're also telling you what I think is important here is that the loan is a medium-term South African loan, and the assets be given as security for the loan. So there's the loans have assets to cover them. And then this is also important. So the loan value approximates the market value, because if I'm doing a ratio and let's say the equity is at market value, I also want my debt to be at market value, which it usually is, because we usually have our debt at a bank, and then that value usually approximates the market value. So that makes it that I don't have to use the book value, but I can use the market value instead. Okay. So, all right. So the total of my debt, interest-bearing debt, is the long-term loan that we've got here. The long-term loan, the short-term portion of my long-term loan, and the bank overdraft. I'll show you why we've included the bank overdraft, because in number 4 we tell you that the overdraft is assumed to be a permanent source of financing and therefore included in the capital structure. Okay, so we've included it because even though it's normally supposed to be short-term, they are using it as a permanent source of finance, and it contains interest, and that's why it's included there. Okay, so then easily, like I said, we've got the formula. You are just going to put your amounts into your formula. Remember, we've calculated the market value of the equity. We've calculated the total interest-bearing debt. Okay, they've we're doing it for 2 years, but I'm just showing you 2025. So then it's my interest-bearing debt over my equity plus my interest-bearing debt. And then that gives me my capital gearing ratio. So you can see that my capital gearing ratio has gone down from 2024 to 2025. All right. So that is in terms of my calculation and the marks that we are going to get there. So you'll see based on that, we can say comparing these 2 years with each other, I can see that there is an improvement. This improvement in management accounting terminology means a reduced finance risk, or alternatively, an improved their credit ratings. Okay. Okay, and why has this happened? Because when I look at my debt, you'll see my debt has increased. But the reason why I still managed to get an improved capital gearing ratio was because my equity was even improved more. And so despite this increase in my interest-bearing debt, so an interest-bearing debt, you would have thought, okay, but this would worsen my case for my capital gearing ratio, but it didn't. And the reason is because the share price is strong and there's a good market perception. Okay. We've set them a target of 0.46 to 1, but there's still capacity then to obtain a little bit of finance because currently we are even below the target that we've set. So this is a good time for us to expand. And then just always remember, it's never a good idea to use a bank overdraft as a permanent source of finance because it's very expensive. Okay, so that is the first part that we've now answered. And then this is the second part. Okay, we're going to look at the interest cover, which is our EBIT divided by the total finance costs. I think I just want to go here. Okay, so then the information that we then need in terms of the next ratio is we've got, okay, for 2025, we've got this profit before tax. Okay. And then we've also, okay, so then we're going to look at note number 2. And then it says the movement in retained earnings was because of dividends as well as the profit before tax includes all interest from ZAR Bank amounting to 15.4 million. So the previous student's question was, I think the word from confused her. Instead of it doesn't say interest received, it is just interest relating to ZAR Bank. And the reason why you could know that it is interest because we are paying is because we are telling you in the scenario that they are our private bank and we want to get more finance into our company. So I agree that the word from should have rather be of, or another word used. It may be that word from has caused you to misinterpret that. But all the interest, it just means it relates to the interest that they have paid them, this 15.4. So we want to get the EBIT. So what do? So we take the EBIT amount, which is this for 2025. This is the EBIT amount. And then this is the interest that we add back. And this gives me my EBIT, and then divided it with the finance cost again. And there's also no other finance cost in this question than this amounts that were given here. So if you look at what the ratio then, how it changed. So our EBIT from 2024 to 2025 has gone up from 1.89 to 1.99, which means that it has improved slightly. So there's a slight improvement. And that means in management accounting language that they are slightly less likely to default on their loan interest payments. And that is something that the bank is typically very interested in. Okay. And this comes mostly because they have more profit, which is excellent. Okay. Even though they've got more using the bank overdraft more and it's more expensive. And this has caused an increase, in terms of the finance cost. They've still managed to improve the interest cover ratio in total. An additional factor that could be taken into consideration is that there could have been resignations and the salary expense could have declined, and that could have, contributed to having a better EBIT in 2025. Okay, so in conclusion, what is always a good idea for management accounting is that, let's say you're doing calculations, and it is possible to do a conclusion, that you do make a conclusion because you might just earn a mark, or one of your sentences before that wasn't clear maybe becomes now clear through your conclusion. So the finance risk in overall has decreased, okay? Then they're likely then to get an approved loan at an even lower interest rate, okay, which is great, okay? So again, we've split the calculation, but there's 6 marks available. You only need 4, so do use your time wisely. All right, I've got a question. I see a hand. Student Ngakali, sorry if I mispronunciate your name. Please go ahead.
I just wanted to ask, the 280 that we calculated for the capital gearing ratio, you said that it includes retained earnings. I don't understand that. May you please explain that concept for me? That one.
When I go to the when I trade my shares, the shares that I'm trading, that value that I'm getting for them, they don't care what is in my books. They just care what that share is worth to them, okay, and what it is being traded at. So they don't look at my retained earnings. They don't look at what it was initially purchased at. They just look at the market value. They're not looking at the book value. So they don't care about the retained. So they say, let's say it's, like in this case, it's 10.40 Rand per share. So that total of 208 million is the total that my shares and my equity is worth. So that then incorporates the retained earnings, because when I don't take it to the market and tell them, okay, I'm going to sell you a share, but 40% of the value of the share has to do with retained earnings, 20% has to do with the original price. We don't do that. We just have a share price, and that share price, absorbs all the profits. They take into consideration what they believe the company's future is looking like, the future prospects. They also, in that, they look at historically, have we been having a trend of making profits? So they don't look at the retained earning, in a book value sense of way. They look at it, how much do they think the company is worth now? Looking back and looking forward, this is what the company is worth now. So there's no more need for a split when you have the market value. Does that answer your question?
Yes, it does. I'm covered. Thank you very much.
You're very welcome. All right, part C of the question. Analyze and interpret the social and environmental performance, and it's only for one financial year. Okay. And then, so what you'll then have to do is from the information, because we didn't tell you this is the social and environmental information. You have to know, what type of things have an impact on society and on the environment. Okay. So these things come from the scenario. The following information applies to CWT for the year ended 31 March 2025. Okay. So to do this and analyze, now, even though I'm saying analyze for this year, I still have to compare it to something to do an analysis. So I don't have 2023, so I can't do 2024. But I still have to look at the movement between these 2 years. Okay. So before we go and discuss it, training expenses, you'll see, has gone down. Do you think it is good? Maybe put it in the chat. Do you think it's good for the company or actually for society that training expenses went down? Let me make a quick poll for us. I'm going to put a poll up, and then you can say, do you think training expenses are good? Okay, I'm having, there's a delay with the poll. Let me see. Okay, otherwise, just write in the chat, do you think training expenses are good, or are they for the society and the community? Or do you think the decline in training expenses is good for the society? Okay. I see, I've got it down. All right. Okay. So even though in terms of a company's finances, spending less money on something like training would seem financially sound, but this is actually to the detriment of these employees that need the training. So let me go then to the discussion of let's go quickly to the employees. Okay. So employee training. And always remember that you are going to have the previous year less the current year divided by the previous year. This is a very simple calculation. Don't get it wrong. Don't use the current year to divide it with. Okay. And then you'll see it declined with 4%. So the training spend has reduced, but this has a negative social impact. And it also means that the training budget, let's say the company has a training budget, they're supposed to spend the money that shows they have money to invest in the employees, and they have not done so. So even though that maybe the company saved on money, they didn't invest in their employees, which are also the key stakeholders. Okay. All right. In terms of staff resignations, it's already it was 10% in 2024, and it's 12.5% now in 2025. Now, both of these are already at percentages. So when you compare something that is already percentages, I cannot say that the move is 2.5%. The move is 2.5 percentage points. Okay, because you cannot compare percentages with each other. If you do that comparison, you call it percentage points. Okay. So employee resignations, you see that it has deteriorated. It's gone up with 2.5 percentage points. Then we have to think, what is the reason that staff would leave? Is there a low staff morale? Are they being poached by competitors? Are they going on early retirement? And in South Africa, this is particularly not a good thing because we have such a great unemployment rate that is much too high. Okay. So you'll see that there's like one calculation mark, but then there are several marks available for the discussion. And then in terms of greenhouse gas emissions, we have the greenhouse gas emissions, it's in tons, and we're also going to do a comparison between, so in 2025, it was 35,000. In 2024, it was 33. So we need to again divide it by the previous year's figure, and you'll see that this has declined. So who think by a thumbs up? Give me a thumbs up if you think it's a good thing that the greenhouse gas emissions declined. Yes, thank you. I see there's lots of people that agree. Yes, so greenhouse gas, we don't want that too. So that is an easy mark. We did the calculation. We were able to see that it decreased. But not only that, we don't want you to just use the word decrease. We want you to say that it's improved environmental performance. So that's quite important there. Okay. So remember to use words like improved. Okay. And in this question, it is especially good that the greenhouse gas reduced because we produced even more units. So if you read the entire question, there would be somewhere a place where you could see that they've increased their production volume. So to improve your production volume and have less gas emissions is exceptionally well. Okay, so you'll see in this question, again, there's 11 marks available. You only needed 7. So I think if you focus on doing what you can do well, then you are able to score. Okay. And make sure that you do stick to your time limits. Read the required very, very carefully, because you don't want to be answering something that is not asked. So even if your answer is correct, that won't earn you any marks. Okay. Are there questions at this stage? So learning unit 1 to 3 has to do with strategy. Okay, we've done that. Today we've done our learning unit 4. And this is what test 1 will be about. Okay. The next work will be after test 1 is budgeting and control and budgeting and standard costing. Unit 6, nature and classification of costs, including variable and absorption, ABC and transfer pricing. Learning unit 7 will be relevant costing, CVP analysis, including things like break-even. So this is where we are at today. And so you've covered now the information that you need to cover before test 1. But remember, for test 4, everything that you've learned for the year will come into play again, so that you don't forget what you've already learned at this stage. One of the exam techniques that I can just reiterate again, when you've got analysis, remember that you need to normally compare 2 years with each other. So look at the movement between the 2 years. If there is a competitor, do compare yourself and discuss how your performance was compared to theirs. If you've got a percentage, look at a reason why it would have increased or decreased, and if that increase or decrease is an improvement or a weakening, then also remember to link it. So don't just say increase or decrease. Remember to say improved or weakened, okay? And then also remember to link it to something that you find in your scenario, or if it's something like inflation or something that happened in the industry, that you do link the movement that you've got. Don't just give us a repeat of your calculations. You need to link that, what you've calculated, to something that you found a reason in the scenario, or a reason that you think is a feasible and valid reason that you could think up, or something that has to do with the external environment, like inflation or the US dollar foreign exchange rate or something like that. Okay. Then from my side, I see there's a hand. Let's maybe student Rahudili, do you have a question?
Yes, ma'am, like last question. My question is, when do we know to like include the percentage increase or the percentage decrease? Because in the first question we did, where they said we must discuss the outcome, we didn't include like the increase or the decrease. And then with the second question, we did include it where they said we must analyze, and then there's a mark date. So like, is it like safe to like include the increase when the increase or the decrease, then you discuss? Or that is my question. My question is like that.
The first question that we did, the C2C question, they never used the words increase or decrease, but that's what I'm trying to say. I also don't want you to use the words increase or decrease. I want you to say improved or worsened. Don't say increase or decrease, because that doesn't clearly tell us that you understood. So I think that's the difference there. And also remember, when you look at those, the first question, those were margins. So it wasn't year-on-year growth that we were looking at. We were looking at, for example, the asset turnover and the debt to equity ratio. So those are ratios you can only compare them by saying percentage points. This is the increase or decrease in terms of percentage points, because they're already in terms of percentages. I'm not sure if that answers your question.
My question is, in the first question, they didn't include like the percentage, like the number itself, like the difference. But then in Alisa's question, no, the capital gearing, what, they did include the percentage increase, and there's a mark there for 7% and 5 point something. So my question is, must we include that percentage difference when we discuss?
I think it's a good exam technique to not repeat the calculation, but to have the figures to substantiate your discussion. Yes, I think it's a good exam technique. Yes.
Thank you.
Pleasure. Okay. Are there any other questions? I see there's Veronica. Please go ahead. You may go ahead. You're on mute. I don't see the question, or I can't hear the question. Perhaps, Veronica, if you can type your question in the chat, if you're having difficulty with your audio. All right. Okay. I will look out for your question, Veronica. I'm not hearing your voice come through. And then we'll answer you on the chat. I just want to say again, thank you for coming to this session. It shows your commitment. It's CTA is a tough year, and but it holds a good, bright future for you. And remember that you've got your classmates around you. If you're not part of the WhatsApp group, please do form part of the WhatsApp group. Other students are going through exactly the same things that you are going through. It's difficult to balance work and life, and then even studies, and especially CTA studies are quite difficult. Even just doing articles is difficult because it's really hard work. Chat to your classmates. They're in the same position as you. You can always reach out to us as well. If you've got technical questions, please do send us a mail or put up a consult so that we can assist you with those. And I thank you. Ms. Venter, if you would also like to say something. Thank you for coming, students. I really appreciate your commitment, and all the best for test 1. And remember that you can do it. There are easy marks available. Yes, there are difficult marks. Focus on what you do know. Get those marks that you can earn. Remember, you do not need, if there are 13 available marks, but only 6 marks count. You only need, 6 marks, and you don't even need all of them to pass. So you can really do it. Okay, so be confident, build yourself up, stay positive. Even if the question seems hard, tell yourself that you can only do your best, and that is all that you really can do. And then I also want to tell you to please eat and drink healthy when you're studying, and especially the days of the exam. Please do not use too much of caffeine. I myself enjoy my coffee, even Miss Fenton enjoys her coffee, but don't overdo it. We've had some students having a very difficult time because they've used too much caffeine. And it's not good for your system because you end up not sleeping, then you end up being anxious and worn out. So please take care of your bodies, take care of your families, and just do your best. That is all that you can do. And be confident. Even if it's tough, tell yourself that you can do it, you have done your best, and that is all you can do. And Ms. Venter, if you will also say goodbye to our students, please. Students, please.
Thank you, students, for coming early on a Saturday morning. We are really grateful to you, and I can't say it better than what Ms. Kornbrink has already said, so you can do it. Thanks.
Thank you, everyone. Have a wonderful weekend full of studying. Enjoy. Thanks, everyone. Bye.
Thank you. Cheers.
Thank
Bye.
you. Bye.
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 Thank you. Bye.
Thank you. Bye.